What's up, Bret E? What's up, man?
What's going on, Alex Brown? It's going down. Just want to say what's up to the people. Konnichiwa, ni hao, hola, and what up?
Love it,
I'm
man.
Bret E, the most positive actor.
The man himself on this evening. The man himself, man. So good. Listen, tonight, it's going to be good, Bret E. Listen, you know it's good when I call him the full Bret E. You know it's about to get real. I'm crazy excited about episode 3.
For the tray ball.
This is good. We are so glad you all are here this evening, checking this out. Again, he's already told you who he is, Bret E, the man of the hour. I'm Alex Brown, and we're going to get into episode 3, talking all things about you getting started in the market. Listen, if you haven't already, go ahead, like this video, subscribe, and turn on that notification bell so you get all the hotness as you hear what's going on. Okay, so thank you all for taking a moment to share, to like, subscribe, all that good stuff. Right now, listen, before we can get into anything, Bret E, give them the hot take disclaimer.
And I've also heard, Alex, that hitting the like button can make your stocks go up in the far future, like 10 years from now. If you hit the like button now, rumor has it that your stocks will go up.
I'm doing mine right now.
But yeah, so what we like to say is be grown. This is not financial advice. We are not financial advisors. You have to be grown and do your own research, and make sure that you make an important decision for yourself and take hold of, doing it yourself. Like, don't just take our advice. This is letting you all in on our personal conversations that we have about the market on a monthly, weekly basis. And for you to be able to go from not being comfortable about the market and being like maybe a little tentative, being scared about jumping into the market, to actually walking you along to take your first steps into the market. So welcome to SOS, your steps of success.
Really good. Really good. So, Bret, let's get all the way into it, man. Just so all of you who are here, brief recap from episode 2. Again, if you missed it, you want to go back and watch that video. We got into saying whether you are single or married. We gave some very specific recommendations about how you can grow. Okay, so you want to make sure you go back and check that out. Okay, about singles, married, doesn't matter either way. Also, we went into how you can identify ways to make room to be able to invest, whether it's earning, spending, whatever it is. How can I make room to be able to start investing? And we gave some very practical tips around that, right? About how you can get that going. And however you did that, whichever one of those worked better for you, do us a favor and just in the comments below, let us know which of those steps, maybe you did more than one, which of those steps you took over the last week, 2 weeks, to get further started in the game. All right. And so
this is about doing. It's about doing. Take action one bite at a time, one step at a time. It's like I don't know how to get from here to California, Alex. All I know is I know how to get from my place to 75. And then the GPS takes over. And then when it's time to make a turn, I make a turn. When it's time to make another turn, I make another turn. But I can't tell you how to get from here all the way to California. But I know that I can do it because I take one step at a time. And then I let the GPS, walk me step by step along the way.
Facts, man. That's good. That's good. But tonight we're going to Cali. We're going to New York. We're going back down to the GA mid. We're going all over tonight, man. All the practicality.
Shout out to Milledgeville real quick. Georgia College. The
Join the
school is so
college.
nice they named it twice.
That's good, man. That's good. Bret, let's get into this, man. We wanna get into as investors. Let's give them a little behind the scenes. Like if y'all been asking for it. Some of the behind the scenes behind like what we've been experiencing, even for ourselves in our personal investing experience, man. Like what have you been learning? What are you involved in over the last, month, couple months, even here lately? Kind of what are you into right now when it comes to investing?
Some of the places. So like I was saying in episode one, I've been investing for somewhere around 7 years or so, and I've been forming my base from that point. And with a smaller percentage of that base, I start taking different chances, like different ideas that I have about the market. And so some of those plays I took in like 2020, like in deep in the pandemic when a lot of good things were on sale and you take a lot of chances. I some of those plays I've been in the past few months, I've been liquidating those plays, like cashing them out, and then turning those kind of riskier plays, taking the profit from some of those and moving those into some of my more stable base plays, like my ETFs, Apple, Microsoft, those kind of things. That's what I've been doing the past few months. So
That's really strong. Like, are you? Does it feel like the growth? I guess the goals, the growth that you have in mind. Do you see yourself like steadily progressing as you are liquidating and making the right and making those changes? Like, how's that going for you?
yeah, it's like there's ups and downs all the time, right? Like every trade idea, and then something that I wanted to touch on, like kind of the difference in my mind between trading and then investing.
Mm,
Investing is more for like your long term 3 year, 5 year, 10 year hold type of idea, like your base. That's investing, in my opinion. And then trading is when you're looking at making ideas on kind of like social idea plays. So if I think something's coming up in the market that the vast majority of maybe like the general population or that the market doesn't know of yet, then I make a play thinking like that might be something that will pay off in the future, like maybe like within 2 years or a year, six
hmm
months, something like that. Those are more those type of plays.
That makes sense. That's good. That's good. I mean, it's good to hear that. I mean, I think that's really going to be helpful for those who are watching and like tuning in for them to hear that. Like for them to hear from someone who is just has been consistent for years in regards to that as far as steady investing. By the way, real quick, Bret dropped some heat last episode regarding dollar cost averaging
Hmm.
that will add so much value to your life. Make sure, again, once you're done here, go back and check that out. So for me, I've been doing just foundational plays, Brett, like for all those who are watching. And so, and like what I mean by like foundational plays is I've been just building like the core, like the base, like the essential. So we talk a lot about we get into some about like ETFs, very strong companies that we're looking at. And so for me, it's been foundational plays. I understand that if I'm going to be able to sit other things on the table, I need four strong legs. Or if you have a circle table, what have you, and you have three legs, but they're all balanced properly, it can hold whatever is on the table. And so for me, that's been key. It's been ETFs, really core plays that give me some diversification in my plays. That's been the only thing I've been focusing on. I'm not looking left and right at the hottest plays on the market. I really couldn't tell you honestly what the new hottest take is on the latest channel. I do not know. I am super laser focused. I'm building up this foundational plays because I'm just determined to win, y'all. I'm determined to win, and so that's what I've been focusing on, and it's paid off tremendously, Bret E. tremendously.
Yeah, I mean, I really like what we're doing because, like we're letting you all in on our real conversations. Like,
Yeah.
Alex and I have been best friends since college, and we've been just building and having these conversations and taking action
Mm.
in the different steps to take action on it and actually putting things into practice to be able to build like a great friendship and a great, like brotherhood to where like we can bounce ideas off of each other and it's a really good sounding board. And I'm just like, I'm honored to know you, like your consistency over the years has been just a really good example to me. Um, and I'm just thankful that like I know Alex Brown.
Hey,
That's really
likewise, man. Likewise, man. And now that we get to allow thousands, soon to be millions of people like into like this dynamic, man. And it's happening. It's happening right now, man. It's happening. Bret E, I gotta give you this, man. I told you before, when I call him Bret E, you know what's coming. Right? I put the E on there, you know what's coming, right?
all right.
So I want to put myself in our community shoes real quick, right? Say they
Okay.
made the decision. I've started investing. I've gotten involved here. I've watched maybe one or two episodes, maybe both of the first two episodes. I've been listening to this person and that person. Who knows, right?
Mm-hmm.
And what I'm experiencing is that I am losing. My account went down. I put money in. My account went down. No one's telling me my account can go down. Like how would talk to us about like what that looks like and what that's like. Wait a minute, I put money in, but my account's going down and I'm ready to run and get out of this investing and go back to what I was doing before, man. How do you speak to that?
Grocery store mentality. Having a grocery store mentality when it comes to looking at the market. So, what I mean by that is, okay, so let's say you're in like the fruit section of the grocery store. So, Al, so what is your favorite fruit, for example?
Strawberries.
Okay, so you got strawberries. To the left of those, you got strawberries. Now those cost a little more, but they're delicious. No, but strawberries. When you see if you like strawberries, you walk into the grocery store. When you see them, and let's say like they were $2 for a little basket or a little thing of strawberries, and then you walk in, and then all of a sudden strawberries are 150. You don't all of a sudden go, oh my God, the price went down to strawberries. Let me get away from strawberries. Let me go look for mangoes, right? But you like strawberries. You know that you like strawberries. So when you see strawberries have dropped in price, they are on sale. So look at strong companies that you've done the research on and that you believe in, or like ETFs that are like a part of your base. When they drop in price, they've just gone on sale. So that's like more of a time to be able to maybe look into getting more of that because they're going on sale versus, oh my gosh, the price just dropped. I should be getting out of here. Let me run, get my money out. I don't know what's going on. Things are too scared.
That's good. That's good. When you were saying that, what came to mind was giving this whole grocery store, which is a phenomenal concept that I hear you breaking down here for, man, for our community, man, which is like we don't always know when the manager of the grocery store is going to mark down the fruit. Like we don't always know. Like apples are on sale, strawberries are on sale, like any of that, right? We go into the store and all we know is there was a price that was here before and this price is different now. especially when the quality is the same, but the price is different.
That's
That's
it.
It's a game changer. Because sometimes I think, Brett, sometimes when someone hears, "Hey, the price is lower," we automatically think something's wrong. Something has
Right.
to be wrong with it. And so I think as investors and getting away from that consumer mindset, when we understand the power of investing, as you're talking about with this grocery store, man, we'll start like understanding that the same way that I can shop for a new outfit and I know how to find deals. If you know how to find deals, you know how to find stocks. I'm gonna say that already. You know how to find
That's
it.
nice right there.
Yeah,
I like
yeah,
that.
yeah,
I
man.
like hit him with it one more time. Hit him with it one more time. Because
Yeah, man.
some people not gonna get this till the ride home.
Yeah, I believe it, man. If you know how to shop for deals, you know how to shop for the best shirt, shoes, whatever a hot item is. You know how to do that. You've done it for years. It's the same thing, but switching it over into a different arena, and now you know how to shop for the best investments. It's a game changer, man. It's a game changer. So it's a matter of just switching that mentality, man, to be able to uh, to emerge out higher and to grow from whatever we've been putting our money towards in the past, and to be able to
Mm-hmm.
put it to more higher quality areas that actually like give you like a really solid return. So man, I really believe that, man.
And another thing about like the grocery store mentality is the opposite side of that coin, right? Think about like what everybody else is doing. So what I mean by that is like the scarcity mentality, thinking that like everything's about to be gone. So like for example, with a grocery store, um, another good idea would be you ever notice how when we have like a snowstorm, right? So for in Georgia, if you just talk about snow wrong, if you whisper snow and you just look at snow wrong, everybody, if somebody spilled a glass of ice water on the ground in Georgia, all the schools are closed down. Everything, people get out of work early, people going home early, and then you go into the grocery store. In 48 hours, all the milk is gone. There's no toilet paper, right? And then what's the other thing? It's like toilet paper, milk, and eggs. I don't know why everybody needs milk, eggs, and got no cereal. But all of a sudden, everybody's buying all the milk out of the grocery store. Forgot to get cereal, but now it's too late. Um, so like what I mean to bring about with that is that when everyone's rushing in somewhere, we should probably be taking a step back for a second and look at the other side of like what's going on over here. Because a lot of times, whenever everybody's rushing into the market, the smarter ones of us are using that time to start taking profits and start moving back out of that position. And then whenever everyone's running away from something, right? When everybody's like running out of the market, a lot of us are like, those are on sale. And now those are buying opportunities if the core of the company, like I was saying, if the core of the company hasn't changed and the core of your belief and your thesis about a company hasn't changed, then that's a buying opportunity.
That's good. That's good, man. It's like you said so many key things there, right? I want to pour this two out real quick. You said the word profit and you spoke of the word position, right? I think these are like really, really key words, like profit and position. So, of course, profit, for those who may not know this, you've heard the term before, obviously, but whatever you've made, your revenue, your sales, right, minus your cost of whatever it took to do it, equals your profit, what you actually able to take home, right? Your profit. I think that word is key. And then you said something else. You said the word, and I love this, man. I even like made a little note of it on the side here. You said the word position, right? Position is key. And so when it comes to position, I want us to understand this is that many times when it comes to position and we're going into the market, we're getting into investing at times too high, right? Meaning that we're buying too high. You heard earlier, Brett was talking about the grocery store and how prices change and they fluctuate. You want to be able to buy it at a lower cost, same quality, but at a lower cost. And so when it comes to your position, that's really key. And so how do you get the best position? Same great quality, but how do I get a better position? That's what we really want to get after, because if you buy something too high and you get fear as it drops some, you're gonna run. You're gonna run for the hills. You're gonna especially okay, Brett, especially when you may have experienced like some things like emotionally, and you have a downturn with investing, you may attach now, hey, I don't want to invest anymore because it's throwing me off on the inside. And now you may feel like I can never return to investing again, or hey, I'm out for a while or whatever. And that's dangerous. And so your position is key. And so I want to give you this when it comes to buying something on sale, right? Is that as you are looking in your platform, whatever you chose, E-Trade, Robinhood, TD Ameritrade, Fidelity, Webull, whatever you chose, right, as your platform, I want you to understand this is that look at the high, the all-time high, whatever it is, the all-time high of that ETF. I'm talking about ETFs quite a bit here. Or solid plays, Apple or Microsoft, Google, who's doing a split here soon around July, Amazon, these companies. As you're looking at these plays, look at the all-time high, and you do not want to buy it. So the all-time high is $250. You don't want to buy it at $249. Why is that? Because you only have a little bit of room for it to really go up unless it makes a whole new high. You want to get it, listen here, 10 to 20% off of the high, right? Even better if the market continues to drop even now, man, who knows? You may be able to get it even lower at 50% off, 60% off. And so using what Brett shared about dollar cost averaging, maybe you get in the first time and it's like 20% off and you're dollar cost averaging in, and then it goes to 50% off and you're able to get more and bring down your average cost. Man, when you begin to do it that way, you're going to find so much more value when it comes to investing. And you have to understand this. And Brett, I want to get your input here. Understand that as you do this, you have to understand you have to invest for longer time periods. Like if you're here for get rich quick, this is not the podcast for you.
This ain't what you want.
This is not it. This is not it. When you understand that my financial well-being is bigger than me and it can eventually outlast me, and there's more to it than just what I need to buy in the moment, it changes everything. So a longer term mindset changes everything. Brett, man, what are your thoughts around all that?
Man, you explain it so well. Like y'all need to go back and rewind, a few minutes and listen to Alex, how he explained that like two, 3 times. Cause like, it's so, and a lot of people got in the market in like 2020, 2021 with like all the stimulus money. And so people were playing with what they felt like was like free money, even though there's a whole other conversation we can have about the stimulus spending and the quantitative easing and the situation that puts us in the future when that happens. But so people were like doing kind of like YOLO type of plays and putting everything in like these risky investments that, they're seeing people on YouTube talk about they made 100x on their money maybe, or 50x on their money. But then when they hear about it, then they jump in when it's at the high, like Alex was saying. And then all of a sudden the floor starts dropping out. And then you're buying at the high and then you're selling out as it's dropping. So now you kind of got double hit. You got hit twice on one of those. And it's just a long-term mentality. And I like to give a lot of explanations with grocery stores because in my mind that makes it more digestible because we're talking about the food, right? Makes it more digestible to people if I can come up with different scenarios that kind of like, or analogies that they can make connections to in the market. So for example, like when 2020 hit, right? When I go back to talking about like when everybody's looking one way, look the other way. And when everybody's looking this way, look that way. When everyone's like zigging, you should zag kind of thing. So when 2020 hit, Bret never ran out of toilet paper, never ran out of hand sanitizer, never ran out of masks, never ran out of, like canned goods or anything like that, because when it was like 2018 and nobody was thinking about, like anything like this happening, I was like, well, I wonder what kind of things could maybe happen in the future. So like I went out and I bought like a few boxes of masks. This is 2018, right? And I every once in a while I'd be in the store and I'd see a bottle of hand sanitizer and I'd be like, oh, I'll just pick up a bottle because whatever. You never know. And so like I was doing that from like 2018 until I got to a point of where I felt comfortable. And then I just left there, because like hand sanitizer, in my understanding, I don't think goes stale. And, like toilet paper never goes stale. So once you got what you need, then you just move on to other stuff. But so I was thinking longer term and just had like step by step, like we were talking about eating an elephant. I was like, I've got this gap of where I don't have this amount of stuff. So every paycheck, I'm just going to take a little portion of that, get a few canned goods, like 4 canned goods. Cost like, I don't know, $2. Or maybe, maybe $5, let's say. 4 canned goods, $5. And I just did that a little bit, step at a time, to where I felt comfortable. And that's the long-term mindset that Alex was talking about. And that we transfer that over to the stock market and we're looking at things that are like long-term holds, 5 years, 10 years, those type of plays.
Absolutely. Listen, if this is helping you in any kind of way, take a moment first and like this video. If it's adding value in any way, like the video. After you like it, make sure you are subscribed, right? Subscribe and also turn on that bell while you're right there and make sure that you are getting all the new videos, okay? And so, Brett, let me ask you this too, man, and us to kind of talk through this some here, which is, so we talked some about ETFs, which you have related amazing to the whole like grocery store concept, right? How do we identify like possible plays outside of ETFs? Like how do we take ETFs and even dive further into them to expound out on some of the things that we're thinking about investing in? Like, how do we do that?
So one of the first things that we can do is start. So for example, like some of the ETFs that we like are ones like VTI, SPY, VOO, VOOG. Those are some of the ones that Alex and I personally like to look at and invest with. So one of the things that we can do is Googling those ETFs. This is a part of your homework and your research. Googling those ETFs and Google top 10 holdings in those ETFs. And it'll tell you what the top 10 stocks that those huge ETFs that a lot of companies believe in are investing pretty heavily in. And then you can also see the percentage that they are invested in. So like, for example, you can look up like a VTI or VOO, for example, and you do the top 10 holdings, and then you can see what percentage of Apple they have, and what percentage of Microsoft, Tesla, and what have you as you go down the line. And use that in a way to where it's like, if these big conglomerates are all betting on these top 10 companies, you start seeing similarities when you start researching and looking at the top 10 holdings of those 4 ETFs that we just mentioned. If those like big companies and millions and millions and millions of dollars, if they're putting their bets here, what necessarily makes me think that I'm so smart that like I shouldn't hitch my wagon alongside companies that it's their whole job to like bring back returns? So maybe those are some of the individual companies that, you know, we want to start investing in, looking at the top 10 ones that are in ETFs. And then that way we can start building our individual stocks accounts, like Alex and I's race to 100 in Apple stock. That was like the first one. But once we cross that, we're going to pick another stock, and we might be looking at like 100 shares of Microsoft. That might be the next bet that we have. So things like that.
Absolutely. And Bret, I want to you all won't be able to see my screen particularly with this, but so I pulled up in one of my apps, right? I pulled up VTI. I talked about VTI in the first episode, and it says in here what's in this fund. It says sectors, top 10 holdings. It's right there beside it. So I can click on top 10 holdings. It tells me right here that the firm, like VTI, the heaviest sector is technology. It says financial services. It has healthcare. It has consumer cyclical. It has communication services, industrial, real estate. All those various things are in VTI. If I go to top 10 holdings, it tells me what percentage of the companies are in VTI. It tells me Apple, Microsoft, Amazon, Alphabet Class A and C, which are Google. It has Tesla, Facebook, Nvidia, Berkshire Hathaway, and Johnson & Johnson. Those are the top 10 holdings in this particular ETF. So as Bret so amazingly broke that down for us, I want us to understand like it's that simple. Like you can look at your platforms, you can Google it and look at what's in these strong ETFs, and they really gives you much insight into the market. So Bret, man, you're amazing. You're amazing, man. I hope you all are finding value from this. Bret, what kind of final words do you have for us today?
Man, I just want to say, go follow Alex, right? Look him up. Like, Alex dropping gems, dropping nuggets, dropping French fries, whatever. You need to just go follow Alex. Dude's phenomenal. I want to also say, like, shout out to Cobb County, Sprayberry High School in the building. I know some of y'all are checking in, so say hello to y'all. My mom and dad, who had 41-year anniversary not too long ago, wanted to say what's up to them.
Congratulations.
And to all the people, I want to say sayonara, zaijian, adios, e will holla.
That's good. That's good. Listen, take what you heard tonight, go and execute. Get serious about your financial future. Keep adding people to the community, and let's grow together as we're on our way up. All right? Listen, y'all, you have a phenomenal night. Drop in the comments as you're learning. Let's continue to grow and build together. Subscribe, like, turn that bell on. Let's keep growing. Bret E.
See you when we see you.
Yes, sir. Peace, y'all.